So let's get into the trading approach a little bit here. Those of you that know me, you probably heard the tag, I'm the godfather of Fibonacci trading. And I like that tag. It was given to me by some good friends back about 30 years ago. I've done nothing to try to dissuade people from using it, but actually it's a misnomer in the sense that what I'm really about is leading indicators. And in order to get you to understand how I got involved, we're going to go back, and I like telling stories. We're going to go back and talk about a story. It's 1981, 82, 83, and I got an accountant in Chicago at Lynn Waldock, and I went to Chicago to take the guys out, and they had a pretty good year. It was grains, I believe. But anyway, I went out there and took the guys on the trading desk where I traded at Lynn Waldock out to dinner. And while we're at dinner, everybody's sitting around and talking about, boy, beans got overbought today, or bonds got oversold today, and well, wouldn't it have been nice to hit that high or buy that low? And I listened to them, and I posed a question. I said, wouldn't it be good to know where it's going to get overbought tomorrow or oversold tomorrow, instead of saying it was overbought or oversold today? They all looked at me with sort of a dumb look. Yeah, well, that'd be fantastic if we could do it. And that's when I went back to Huntington Beach, California, and got with a friend of mine. His name was George DeMusis. He's passed on now, but good old George, he went to work. He was a physicist, and he started putting together some parametric equations and came up with something called the oscillator predictor, and that's exactly what that sucker did. It predicted a period ahead of time, whether the period was on a 1 minute chart or on a yearly. It would predict one period ahead of time where overbought and oversold was going to manifest. And that was the first true leading indicator that I developed. Now, of course, I was into displaced moving averages. So when you move that moving average out into the future, did a lot of research, and I had 3 hard years of research on displaced moving averages on a QX10 CPM machine. Digest that. Okay, I did a lot of research on that. That's also leading. So we've got the oscillator predictor, George helped me with. Then we've got the MACD predictor. And that actually came from an associate in Moscow. That I went to Moscow and did some training, and this guy got a hold of me and he said, look, I found a way to make the MACD leading. You want to see it? I said, well, I want to see it. Wow. Absolutely. So that's where the MACD predictor came from. And that is just incredible. Fibonacci work. Well, the Fibonacci work I do, it's obviously leading because you get the numbers up ahead of time. But the whole key to the Fibonacci work is that you got to know how to apply the Fibonacci work, what works, what doesn't. And so we got 4 leading indicators: oscillator predictor, MACD predictor, and we've got the displaced moving averages, which get out in front of the market, and we've got the Fibonacci analysis done in the right manner. And if you poke around here on this website, you're going to see examples of how this stuff works. But there's a lot more you're not able to see because it takes training and teaching.